Hello, welcome back. All the major indices are at or near their all-time highs. The Dow, the Nasdaq, and the S&P. That means a lot of stocks right now are overvalued, or they're at very high prices, which means that they're very expensive right now. So I thought today I would do something a little different. We're gonna go over some stocks I already recommended to you guys, see how they're doing, see if they're great buys still, because really, trying to find new stocks right now to recommend is kind of unfavorable, really, because it's so overvalued that even if they are great companies and have great sales going forward, they're at such high prices that all of that is already priced in. So we're gonna look at three stocks that I already spoke about in the past few months, but might still be great buys at the moment. So the first one I want to talk about today is Clean Energy Fuels, and the ticker symbol is CLNE. And recently, it's been getting a lot of attention from Wall Street bets for a bunch of reasons. Mainly, it's undervalued, but also it's heavily shorted. So, naturally, Wall Street bets target stocks that are very shorted, out of favor with hedge funds and big banks, and they try to push the price of those stocks up. But, I spoke about this back in February, not because of that, but because I thought it was a great business overall. It was trading at $14 back then, but let's look at the charts and see how it's doing now. So back in February, it was trading at about $14, and I set a price target of about $40. So I still think that it could hit $40, but since then, it struggled. In March and April, it had a few rough months, and the price went all the way down to about $7.50 before bouncing back in the past 2 weeks. And the reason it bounced back is because of all the attention it's been getting from Wall Street bets. I honestly don't know how it ended on this subreddit, but I think it has to do with the fact that the price was getting so beat up, even though it is a really strong stock and it has a very strong business. So as you can see in the past week, since June 2nd, it doubled. It was at about $8 and it skyrocketed to $16 before coming back down and closing the week at about $10. And the reason it got hit so hard when it hit $16 is because they disclosed that one of their top shareholders sold about 1 million shares of Clean Energy, and that caused a little bit of negative sentiment towards the stock. So it went down from $16 to about $10. But I still think that at $10, it is a great buy for a bunch of reasons. So first things first, what is Clean Energy Fuels? And if we look at their 10K, they described their business as being focused on developing dairy and other livestock waste into renewable energy gas projects and supplying renewable energy to its customers in the heavy and medium duty transportation sector. So basically what this means is that they get a bunch of, cow poop, and they turn it into renewable energy, and they supply it to a bunch of trucks, buses, medium-sized trucks. A lot of delivery services use this natural gas to power their trucks and delivery services. And the reason I like this stock is because over the past year, they have formed a bunch of strong partnerships with different companies such as Total SE, BP, Amazon, and the LA Metro Company. So all the buses in the LA Metro Company are using renewable gas powered by Clean Energy Fuels. And the reason this is so significant is because they have signed contracts basically stating that these companies have to use their renewable gas. And I honestly think that they can create more partnerships in the future just because there is such a push for renewable gas at the moment. People want to be more environmental friendly. The government is issuing federal tax credits for that, and it's just better for the earth. So I honestly think that they're just going to keep increasing their number of partnerships, which in turn is going to increase their revenue and cause the company to have a much richer valuation. Right now, it is valued at about $2.2 billion, which is very cheap. And I honestly think that at $2.2 billion, your risk is not that big as if you were investing in another meme stock like AMC or GameStop, which have reached valuations over $20 billion. Basically because, if we look at their balance sheet, it's very strong. Clean Energy has about $730 million in assets in comparison to about $215 million in liabilities. So their balance sheet is very strong. They just sold more stock about a week ago, and they've been issuing more stock throughout the year. They haven't diluted their shares in a crazy amount. They're not doing this every month or so, but they have, had some sales for their stock here and there. It shows that they're able to sell stock and raise cash in order to fund a bunch of their projects and really expand their business. And this makes me very bullish on clean energy fuels because if we look at this chart, it just shows that the amount of renewable energy being used and bought by companies is just increasing over time. From 2020, even though there was a pandemic, the amount of renewable gas in the United States increased 25%, and since 2016, it's nearly tripled. So right now, companies like clean energy fuels, I believe, are very undervalued. And I don't know how long it's going to be undervalued, because if Wall Street Bets is getting involved, then they already showed in the past that they can really shoot up the price of a stock in, just a couple of days, even a couple of weeks. So this is really a good time to get in. The stock is at $10, and like I said, it only went down because one of their major shareholders sold some stock to raise cash. So it's not like something is wrong with the business. It's not like, they have a big scandal going on. This is not a meme stock. This is a very lucrative business that is really just getting started right now. The company's been around for 20 years, but really right now people are starting to adopt their product and use it a lot more. The product is in really high demand, so because this is not a meme stock, bro. Okay, boom. And the second stock I wanted to update you guys on is Viacom. So Viacom is at $42 right now. I pitched this stock about a month ago when it was at 41. So the stock hasn't moved much since then. It's only moved about 2%. And really, I still like this stock for a lot of the same reasons that I spoke about a month ago. So a month ago, if we look at the chart, it was at 41. It really hasn't recovered that well since that billionaire over leveraged his position and single-handedly crushed the stock. So I still think this is a great investment opportunity because this is a great business, and really the crash made it so that the stock could be valued at a very good price. So it's at $42, a $27 billion valuation right now. And, their price to sales is still 1. Their price to earnings is still 10. The reason I like it even more now than I did a month ago is for a bunch of reasons. So in my last video, I spoke about how I wanted to see Viacom really make their content exclusive and really leverage the assets that they have, because they have a lot of valuable assets. They own the rights to Nickelodeon shows, to MTV, Comedy Central, a bunch of sports events like the Champions League, and they're the owners of Showtime. And Showtime had one of their first pay-per-view events since the pandemic last week with the Floyd Mayweather and the Logan Paul fight. And, obviously that can be very lucrative for them going forward, because with the return of live events, there's going to be a lot more pay-per-view events. And, pay-per-view events and really live sports just aren't the same when there isn't a crowd of people there. So I expect them to become a lot more exciting, a lot more in demand as these arenas start to fill up more and these sports events become a lot more exciting to watch. And so since I made my last video, I guess they were listening to me, because they released a Rugrats exclusive at the end of May. And, they also announced that they were going to release a lot more other Nickelodeon exclusives, like an iCarly reboot, and that they plan to do another reboot in the future for a lot of their other shows. And for Paramount Plus, this is exciting because, it's going to be exclusive to Paramount Plus, which is really what they should do if, they want more consumers to switch over to Paramount Plus than, stay at Netflix. Because, it only makes sense if, they're showing the same content that's on Netflix, then why is somebody going to switch over from Netflix to Paramount Plus? So another thing I like about Viacom that can bring them revenue in the future is that they have a $5 plan with Paramount Plus. So this $5 plan, people have to watch ads with it, or you could get the $10 plan, which is ad-free. A lot of people are probably going to opt into the $5 plan because, they want to have other streaming services and they'll just rather have the cheap one. But this is good for Viacom because although they're only getting $5 from their subscribers, they're going to be getting a bunch of revenue from these ads. These ads aren't really spending a whole lot on cable companies anymore. They'd rather be on streaming services because they know that's what people rather watch nowadays. So I really think the $5 with ads option is going to be very lucrative for Paramount Plus. They just announced last week that Pluto TV, which is another streaming service that they have, brought in $1 billion in ads last year, which is a lot of money if you really think about it, because not a lot of people were using Pluto TV. It just came out last year. I think it came out in the middle of 2020, and they made $1 billion alone. So, if people start subscribing to Paramount Plus and they're just like, we're just going to get the cheaper option, then this could be very lucrative for them going forward. So I said the price was 42. In my last video, I had a price target of about 60, I believe. I honestly think this stock can get to about $70 or even higher. If it's at $70, I think you should definitely take your profits. Like don't like lose your profits just because you think it's gonna go back to 100. It might not, but I really think it can hit $70 because it has such a strong balance sheet. You know, Paramount Plus really looks like it's gonna be a winner in the streaming services because Viacom is investing very heavily in it. And finally, NIO. So NIO is right now trading at about $45, and I recommended this about 2 months ago in April, and when it was at 39, and everybody was selling off their EV stocks. So if you look at the chart, like I said, it's gone up, and it is at about 45. It had a very strong week last week, and I honestly expect it to keep performing very well for a bunch of reasons. So in my last video, I already told you about how I think NIO is such a great company. They keep doubling their sales, hitting new record sales about every month, every quarter. So I expect them to keep doing that. But really now it's starting to reflect in their share price. So since the posting of my video, it was at 39 and it went down to 30 before rebounding in the past month. And really, if you had invested in the middle of May, you've already made 50% of your money back. So it just shows you that there's a lot of bullish sentiment towards this stock, and for good reason. So if we look at the chart and we do the technical analysis on this stock, we see that, since I posted it, it was at 39. And, shortly thereafter, it crashed down to 30. It broke under the 200-day moving average and the 50-day moving average. But since the middle of May, it has rebounded very strong, and it has already regained that 200-day moving average and the 50-day moving average. Which shows us that there is a lot of bullish sentiment around NIO right now, and for good reason. So just, about a week and a half ago, they announced their May deliveries, and their May deliveries were above expectations. So they delivered about 6,700 vehicles, which wasn't a record for them, but it was pretty strong, being that there is a chip shortage right now, and they still expect to hit their Q2 delivery target, which is about 22,000 vehicles. So if they do hit it, that implies that they expect to deliver 8,000 vehicles this month, which would be a record for them. So I think that in the coming weeks, like in the coming 2 or 3 weeks, you really have to look out for this news, because if they do miss that Q2 target, this price of the stock could go down. But recently, it seems like every time they release new news, it just keeps going up. Another reason it's gone up is because just last week they announced that they were building a new factory to build more cars, which the CEO expects will double the amount of cars they can make in a single month. Also, it's official, in September, NIO is going to be selling cars in Norway, and next year they expect to start selling cars in Germany. They just got approved from the EU to begin selling cars in 2022 in Europe. So, I really feel like their sales are just going to be doing very well from here on forward. It seems like the chip shortage is behind NIO. Really just look out for those June delivery numbers. If they hit that, then this stock is probably just going to skyrocket. The all-time high is 67. So even though it has rebounded pretty well in the past month, NIO is still about 35% off the all-time high. It can go a lot higher, and the price to sales ratio, you're probably thinking like NIO's super overvalued, but you really have to account for the fact that they are doubling sales every year. So the price to sales ratio is using numbers from 2020, but you can't really use those numbers because in 2021 it's going to be double that, and then in 2022 it's going to be double this year's numbers, because it really seems like people who use NIO, they much rather drive their NIOs than drive a Tesla or another electric vehicle. Although it is a new manufacturer, people might be a little skeptical of it, but with all the good news that's coming out, all the updates that they are bringing out, it really shows that this is a real company. But yeah, the market is forward looking, which means that I think a lot of the troubles that NIO was facing, lack of production and the chip shortage, I think the market is looking past that now, and it's really pricing in all the benefits that's going to come from the expansion in Europe, and the ability to produce more cars, and their battery swap technology is still very good. I'm honestly surprised that this stock has not gotten more attention from Wall Street Bets or any of the other media blogs, but eventually it will when it starts doing very well. A lot of the banks are very bullish on it too. They are increasing their price upgrades. So really with NIO, as long as their sales keep increasing, I honestly think this is a great buy right now, even at 45. Really, anything under 50, I would say that NIO is a pretty good buy. Once it's over 50, then yeah, you can start second guessing it, I guess, because it'll be a lot more overvalued at that point. But as long as the stock remains under 50, I think you're getting it at a great deal, because this thing is going up. It's going to the moon. But yeah, thanks for watching, guys. Don't forget to hit the like button and subscribe if you haven't already. It really helps me out. You know, clean energy, Viacom, and NIO, they're all going to the moon. So, you know, I'm not a financial advisor, so who knows? But I think they're going to the moon. So I'll see you in my next video.